The European Central Bank has been going in the right direction. He has pushed expansionary policy that are going to help those economies that are hit harder by the crisis. But of course, this is not going to be enough, and now we are going to see what's going to happen in terms of more like transfer among countries. Our paper emphasizes the effect that lockdown sectors may have on the demand in other sectors that are unaffected in the economy. Unfortunately, when you are at the peak of the health emergency, like in Italy or like now in the US, our mechanism becomes less visible because the number of non-affected sector is very small. But this is going to be even more important when we're going to go to phase 2 and we're going to try to reopen slowly the economy to think exactly about these intersectoral linkages among different sectors. Our paper emphasizes the linkages across sectors, but of course you can rethink about this framework in terms of linkages across states. And if you think about the European Union, this becomes particularly important because there is a high level of trade across different countries. So what our paper would imply, of course, it's not explicitly on that, but one could learn some lesson, and that lesson would be that there is a need to consider the flows and then the effect of demand of shutdown of some countries on other countries. And so there is a particular need for coordination among policies in different countries. Now, this, of course, is imposing an extra stress on the European system where the fiscal union is still far to be in place. And so it's hard to predict what's going to happen, but my impression is that either this is going to push in the direction of finally getting a fiscal union in place, or it may actually lead to a further fragmentation of the European system. In a situation like this, where some countries completely lock down and some others don't, there is clearly scope for transfers, for fiscal transfers across countries. This is a classic example of insurance that may actually help the economies that are hit harder to recover faster, and given the linkages across countries, may help the economy to the whole economy, the whole European economy to recover. Now, clearly, we come from another stress the European system has been put through due to the sovereign debt crisis, where some countries were hit harder than others and asking for help from the other countries. And so the problem is, as usual, that the countries that are less hit hard, if they're always the same to pay, there may be concern. And so the fact that some countries, the countries that started with a weaker economy, are going to be suffering more, may be of concern and may be problematic for the resolution of the transfer scheme that is going to be in place. The European Central Bank has been going in the right direction. He has pushed expansionary policy that are going to help those economies that are hit harder by the crisis. But of course, this is not going to be enough, and now we are going to see what's going to happen in terms of more like transfer among countries. The break moment for Europe could come if some of the countries that have been hit harder by the pandemics will have a hard time to recover and will need to borrow more from the rest of Europe. More generally, one of the long-lasting effects of this crisis is going to be high deficit and high debt, not only in the European countries, but everywhere else. And so The issue is going to be how we are going to deal with this higher level of debt. And in Europe, this has been proven particularly hard in the past. So hopefully we are not going to run into other sovereign debt crisis like we have done in the past.